Hi, everyone, and welcome to this new episode. We have Nazir here, that is the director of the House of Fintech in Luxembourg. It's a pleasure to have you here, and it's a pleasure to be hosted by you again.
It's a pleasure to be here with you. Thank you.
So I still remember that the first time that we met, I was like amazed by the kind of experience that you have in the startup ecosystem overall and in the fintech ecosystem specifically. So the first question that I would like to ask you is, can you tell me a little bit about your personal experience in this ecosystem from the beginning?
Okay. So let's put some context into this first. You've, I think, said the word fintech about 3 times, and you called us the House of Fintech. I personally hate that word.
Nice.
When I first started my career 30 years ago in finance, I had 6 screens in front of me, Bloomberg, Reuters. Nobody called it fintech, right? It was financial technology. It's part of the broader ecosystem of finance. I think the term fintech has done more harm than good over the years. I think it's a buzzword that has largely been created specifically for the venture capital industry and to be able to position firms for that industry. But I think it created friction with the traditional finance sector where it became a them and us attitude. So I prefer, be it that I do use the term, I'm sure I'm going to say the term during this talk. I try and avoid it as much as possible. So we are the Luxembourg House of Financial Technology. I specifically didn't want to call it fintech because I wanted it to be all embracing, big one. Okay, so my experience in this sense. So if I broaden that ecosystem to finance, if I may, right? I've lived and worked. I had the pleasure to live and work in 9 countries now in my career. I am old, 50.
Not that old.
Not that old. Still many years to go, but I've seen and done a few things. I've worked now, 27 years in finance and financial technology. I used to be able to say that half of it was in traditional finance, but it's less than half now. And I started my career always throughout, just as context, I've always used tech, right? I don't see how banking and finance works without technology. But I started specifically at a technology vendor, I guess, Reuters. And I was brought in there to define I was a mathematician, and build their credit risk modeling techniques and business requirements to be coded into their Condor Plus system, which was the biggest risk management system used by all the banks. Then I went into the electronic broking industry, where I spent a long time at which is still, I believe, one of the, if not the largest exchanges that has ever existed in the world, the EBS dealing system. Nobody's ever heard of it, but it was the core interbank foreign exchange trading system, processing about $220 billion a day in volume, about 130,000 transactions in volume. I believe that's still much larger than the NASDAQ or the New York Stock Exchange. And, there, I really enjoyed my time there because I've always been on the business side of technology. I can't code, but I understand how technology works. I can do a bit of architecture, diagramming, etc. But there, what I really enjoyed was the way that we really pushed the market forward, made it change. So electronic broking already was a big switch from the manual dealing world, and then defining products for data, prime brokerage, what else do we, netting services, etc. I felt like we were changing things, and enhancing.
You were having an impact on the industry.
Yeah, exactly. So that was great. And then we were taken over by ICAP 2006, and this really puts valuations into perspective, where I think they're completely nuts these days, right? So we 180-person company, generating 600 million or so in revenues plus per year, was worth 659 million to ICAP. Let's put that into perspective of companies today. Right?
If you make a comparison with startups.
Absolute cash cow, right? I mean, it was I think the average was $7.50 per trade. Work it out, 130,000 transactions a day,
Per day, yeah.
right? It's a cash cow. That was worth 659 million. So ICAP bought us. I stayed on for a bit, let my shares vest, and then I sort of put up my hand and said, I'd like to do something else. I'd like to go on to the sell side, to the banks. And given that we'd worked a lot and the fact that I was on the patents and helped define the essence of the system and how it does its matching engine and all of that, in hindsight now, the term that's often used is flashboy, the people that designed the exchanges and then went onto the trading floor. So then I joined RBS and was asked to help set up their high frequency trading desk, which I did, hiring a bunch of genuine astrophysicists from Oxford University. And we very quickly, once we'd set up the algorithms and started all the trading, so all this AI stuff I find hilarious because I actually used to do this. We became the biggest trading desk in the foreign exchange markets globally. We're trading about 12 to $15 billion a day, right? All done by algos. But what I realized was I wasn't enjoying waking up anymore. And somebody had previously told me, an old boss had told me that I'd asked her, she'd been an investment banker, like Royal Bank of Canada, etc., and then she'd working in tech. And I said to her, why did you make the switch? You know, you were in this glorious profession, investment bank. And she'd said to me, it was because I didn't enjoy waking up in the morning, and that's always stuck with me. And I wasn't enjoying waking up in the morning. And so, because I wasn't learning anything new, I didn't feel like I was doing anything new. I was earning lots of money, but I wasn't doing anything new. So I sort of made a decision that first I was started thinking about switching careers entirely, and I thought, right, I'll get one of this 2007, 2008. I want to go work for the big techs. You know, this looks interesting. This looks where the world is going. And when I started looking at their job descriptions and for their, open vacancies, everything said MBA required, right? So I thought, okay, if I want to work for these guys, I've got to go and get one of those, right? So I decided to maybe go to business school. I like the idea of, again, learning. Now, I figured out fairly quickly that I was a little bit on the older side, because by then I was about 32. And I thought, do I
want to
MBA,
start again?
But then I got introduced to this program called the Sloan Masters, which is done at London Business School, MIT, and Stanford. Only those three schools. Fairly prestigious program, but it's a full-time course because I didn't want to do an executive MBA. If I focus, I want to focus on something. And the participants seemed to be a bit older. It was targeting sort of more senior management. So I applied for that, and I thought, great. Okay, so I got into all three schools. So I had to pick, and I decided I wanted to go to Stanford, because obviously I then saw the links with the target firms I wanted to go to. But this was all around the time when, the proverbial poo started hitting the fan, right? And
around the time of the financial crisis, right?
Exactly. Lehman Brothers collapsed, and then RBS bought ABN AMRO. And everyone internally knew this was a complete and utter mistake, which actually gave me even more reason to maybe
to make the switch. Yeah.
But I had a few months. I'd accepted, I'd already applied, I'd been accepted, but you have 3 months notice, so I was keeping it quiet until the right time to resign. And then in RBS, with the takeover, all sorts of politics and everything, people started getting fired. And I was brought into the head of trading's office, and he said, we want to make you global head of foreign exchange, fixed income. Okay. And they dangled a very large carrot in front of my face. And sort of my gut reaction was, okay, I'll take that.
It's always hard to say no to that kind of things.
And I thought about it for couple of weeks and chatted to my wife about it, and I came to this conclusion: I'll have a nicer car, I'll have a nicer house, I'll still hate waking up in the morning.
Yeah. And
so after 2 weeks I went in and resigned. They hated me for it, but the best decision I ever made. I started business school in August 2008. I didn't go to Stanford. I'll talk about that in a second. And in September, RBS completely fell apart, right?
Oh,
So I
wow.
probably would never have been paid that money anyway. I ended up going to London Business School in the end because around the same time, my wife found out she was pregnant with initially triplets. So I
Wow.
would have gone from 1 to 4. And again, something I'd learned is never do 3 big things in one go, right? So quitting your job, moving country, having babies,
Yes.
too many things,
Yeah,
right?
yeah, yeah.
I couldn't do much about the first two.
Yeah.
I quit and I was gonna have babies.
So
So moving country, I switched to
maybe not.
London Business School. So I went there for a year. Absolutely loved it. The learning experience was amazing. I really focused on the learning, and I learned new things. Right, the finance courses that I know that stuff.
Yeah, you were coming
Pri
from that background anyway.
Exactly. Private equity was very good. I mean, because they could bring in the people that did the deals. So when we did the case studies and did the analysis, and we then discussed it in the lecture
With the
theater,
actual
they would
person,
bring
yeah.
the deal makers in. And I still remember when Bain, the guy from Bain came in to talk about, we did a case study on Ducati and the turnaround at Ducati. I thought he was the most intelligent human being. The logic they apply, it's
Yeah.
unbelievable. It's like robots. But I had a great time doing that. But then, I came out of it and the whole financial world was in
A
chaos.
ruin, yeah.
And I thought, what do I do? And my wife said, why don't we move to Bali? She had some childhood friends of hers who'd done it recently. I said, okay, let's go. So we moved to
Let's
Bali.
go there.
It was nice. We moved to Bali, um, which was nice with our youngest son in particular, because he was born with a few disabilities. So we didn't end up having triplets. We had one.
Oh,
And he had some disabilities. So it was nice being able to care for him in a warm climate.
yeah.
And also our decision to deal with those disabilities via operations in Singapore, because I'd lived in Singapore and their health system was
It's nice.
very
Yeah.
superior. And so we strategically decided to do that as well. And we knew that the aftermath of those operations was he had to be in almost a full body cast for quite an extended period of time. So putting on clothes and things in the cold weather of
Yeah,
London,
it's
whereas he
complex.
could wander around
Yeah.
naked in Bali was nice. But again, with Bali, I got bored after about 6 months, got frustrated with the internet connection. So I came back to London. My wife and kids stayed. Easy thing was I ended up doing some consulting work for HSBC in foreign exchange again. And I was commuting to Bali. I can genuinely say I commuted to Bali. That was nice. And but that actually gave me exposure, because a lot of the media and press was then very much focused about where all the gaps were. It was around the time the 1% movement. It was like 2010,
10, something like that, yeah.
And all the media, no money for SMEs having problems with banking.
Yeah.
And also with the work I was doing in HSBC, because I was writing their global foreign exchange strategy, I began to see how, the segmentation and pricing, because I'd never really had to deal with corporates. I was always interbank, right? And what's the word I'm looking for? The way that corporates and particularly SMEs are raped and pillaged in terms of services and pricing, right?
Yeah.
I mean, when non-banking financial institutions are paying maybe half a pip on foreign exchange. When you go down the ladder, SMEs are paying, 8
A
to 10
huge amount
pips,
of money.
huge amount.
Yeah.
Why?
Yeah.
I mean, the liquidity is there, especially in euro-dollar. You don't need to be charged.
Yeah.
Again, this kind of led me to set up my first business. I sort of started looking at my first business around 2011. I quit from HSBC, and the first business was called EuroTRX. It was the idea was to set up a trade receivables exchange, so using invoices as an asset. I mean, there's invoice financing. I'd learned all about that. But why can't, and again, you learned that an asset-based lending service that banks provide to SMEs, they're charging in the region, 16% plus for this,
Oh,
right?
wow.
It
That's
was
a huge amount.
insane. So I said, why can't we create more liquidity in this market? Bring in other actors to purchase these invoices, I can create the algorithms that can, using again machine learning, that can help to reduce and eradicate a lot of the fraud and fraudulent invoices, and we create an exchange out of this. And there'd been one launched in the US. I went about building that in the UK, and this was around the time when the real kickstart of what is now known as the modern fintech movement began. It's when Funding Circle, Zopa, all these firms were beginning starting around this time. So I went around about doing that. Partnered up actually with a guy from LBS, from London Business School. And we went, it was the first time we did this, and it was a fantastic experience. You know, you really start learning about execution, right? That you have to do
the day-to-day operation.
You have to do. And we were very fortunate because, you know, actually after about a year and a half, it got essentially bought out. I mean, not for a huge amount of money, but still a nice amount of money. It was bought out by a Dutch subsidiary of the government who were looking to implement a national system. So we sold it. I thought, hey, success. Done.
Yeah, it's easy. I mean,
then ironically, through old connections from the capital markets days, I got pulled in by a VC to come in as with the funding round that they were putting in to be sort of the director of product marketing at the Currencycloud, which is now
it's a huge company now.
And I came in, and what also helped was that the CEO that was being brought in, Max Levin, one of the last things I had done at ICAP before leaving was actually buy his company.
Oh, wow.
He was the CEO of a company called Triana, and we had bought, I had made the proposal to buy Triana, and then I'd left ICAP and they bought Triana. And so I knew him. And be it not that well, the founder and chairman, who became chairman, Nigel Verdon, I also knew because he used to be in capital markets. So there was a bit of incest there. So I went there, joined them, but I said, I don't want to, this is not what I want to do permanently. I've done enough in foreign exchange and all this stuff. So I came in.
I want to change things a little bit.
Yeah, exactly. So I came in, helped them get to sort of the next funding round, etc. And then I left there. Did a bit of consulting work for like a liquid asset exchange, you know, that was building an exchange to trade all the mortgage-backed securities that had collapsed in price, but there was still value in these things. And then I was sort of met up with the guys in Berlin, Jan Beckers and these guys. I like this concept of the company builder, right, which is such a German, this is such a German company, which to me, basically, I boil down to we know how to build companies. Let's apply that on a robust scale, on a mass scale. Let's make a machine out of it. It's like what GE used to do, right? We don't need to be innovative in terms of business model, in terms of process, in terms of product. We can do what others were doing, but do it better. Right?
We can scale up the process of building companies.
Exactly. And what I liked about it was by then, you know, having spent some time around this, what had now become fintech, was I had a lot of ideas, right?
Yeah.
And this was this opportunity where we could do all of these things.
Yeah, at the same time. Yeah.
At the same time.
Great.
Which we did, right? It was brilliant. And I really liked that. So I went to Berlin, joined the team, and we built great businesses, right? It's a shame. I mean, I just heard about Solaris. Solaris was my business case, right?
Yeah.
Because I'd actually gone to Jan, because I had actually tried to set up a similar bank in London and said, this is what I want to do. And so we eventually did it. And I'm sad to see what's going on. Yeah. I was with Marco Ventin last night, actually.
Oh, okay. Yeah.
Yeah. I hired him to be the MD of Solaris.
Okay. Yeah.
But Bill Front, all of these businesses, I mean, it was great fun. I really enjoyed it. And I loved being there. I loved the way we scaled. You know, we went from, Ramin was first, I was second. And then when I left, it was like after 18 months, there was 180 people with all these businesses, right? So real massive.
It was in like the first phase of the cure.
I mean, we launched 12 companies in that period, right?
You were also involved in Penta at one moment, or it was
No,
after?
Penta was after.
Was after. Oh, okay, yeah.
Penta was after. But the reason I left was I really enjoyed it. But the reason I left and ultimately came here, I'll explain why here. Well, because during that time, both my parents died 6 months apart.
Oh.
And when I was in Berlin, my wife and children were in Brussels, and I was commuting every week. Tried to be every weekend, but maybe 3 weekends in a month. And I'd been asking anyway. So at Finleap, I was very much involved in hiring as well, because I believe people are the core of a business. I'm very people orientated, and I believe that employees are absolutely critical. I believe in treating employees well. There's an autocratic style of management. And one way some people define it is, are you a Steve Jobs or a Bill Gates? I'm more of a Bill Gates. I'm a nurturer of people. But I believe people are absolutely fundamental. They're not commodities. They're the core to a business. And one question that I still to today ask in every interview, which is my key question, and I was asking even then, is I say to people, the person I'm interviewing, I say, look, one day you're going to die. When you die, somebody will write your obituary about you. If you write your own obituary, what will you be remembered for? Now, a key facet of that, because I've written my own obituary, I highly recommend writing it because it helps define my goals in life.
Also, what you did and what you want to do.
What is my legacy, right? It's defined that, and it's never changed, actually, since I wrote it about 13, 14 years ago. But a key facet of that is, again, people, right? To summarize, aside from the business side, I say that I want to be remembered as a good father, a good son, a good brother, a good husband, a good friend, right? Because the only people that all the money in the world, you can't take that with you. It's people that stand around your grave. It's not robots. It's not anything. People stand around your grave. And I think experiencing, my parents' death, I realized that maybe I wasn't fulfilling that personal side of my objectives.
Your goal.
And so I decided I wanted to be with my family. I didn't like this commuting thing anymore. We talked about it. My wife didn't want to come to Berlin. I didn't particularly want to go to Brussels. So, we started talking about other places. I had ironically I'd never been to Luxembourg before in my life, but that year I bumped into someone in Luxembourg who is now one of my best friends here, and arguably is the reason why I'm here. It's all his fault. He introduced me to some people here. They called me over to speak at a conference. I was genuinely very impressed with how open everyone was, and talking to CEOs, ministers, etc. And I just happened to mention this to her, and she goes, oh, the EIB has been trying to get me to come and work for them forever. So we started looking into it a bit more. She talked to the EIB, and they offered her a job. I went and sat in Brussels for a few months while this process went on. What am I going to do in Luxembourg? And I thought, well, I'll come here and build another bank, right? Because we just launched the Solaris Bank. And that's what I came here to do. But Luxembourg is a small place. Within a month or so, I found myself sitting in front of, Nicola Merkel, who runs Luxembourg for Finance, very important chap here, saying, look, the Minister of Finance really wants us to define a strategy for Fintech for Luxembourg. Can you help us? But sure,
why not?
You pay me.
Yeah, of course.
It's always nice earning a bit of money while you're trying to set up a business. So I consulted for them. I defined the program. I defined the whole concept of the LHoFT and the strategy, etc. Great, there you go. I'm still working on the bank. I'd got together a really powerful team here, actually, ex-bankers, CEOs of banks.
The first time that we met, I still remember what you told me about Luxembourg, and you told me, I moved here because here I can get things done.
Oh, yeah. It's unbelievable what you can get done here.
Yeah.
But anyway, then I get put in front of the Minister of Finance, and basically they say, we'd like you to run this now. And I said no. Carried on. A few weeks later, I get asked again. And even I'm not that stupid to say no to a Minister of Finance twice, so I accepted. And I've had a great ride. So that's what I've been doing. A long story, I'm sorry, but you did ask.
But it was a very interesting story. But I wanted to ask you something about what you said in the beginning. So you said the terms the term fintech actually made more harm than it did good, that you prefer financial technology.
Yep.
Can you expand on that a little bit? Because I think that in the beginning, at least like in 2015 to 2020, that was exactly the case. I mean, many banks feel, feared about this kind of terms, feared about, startups incoming, and they try to oppose that kind of flow. Maybe right now, in my opinion, the thing is changing a little bit.
It's changed.
Yeah.
So you've answered the question. I don't need to answer it. No, that's exactly what happened. Because it was them and us.
Yeah.
Right? We even leveraged that a little bit here with one of the best pieces of guerrilla marketing we ever did. We had a fintech fight club here.
Nice.
About 6 or 7 years ago, we set up at a big conference here a boxing ring in the center.
Wow.
We trained the fighters. They all received training, and we had actual fintech fight club. You can check it on our YouTube channel, etc. It's there, the videos of these fights where bankers fought fintech.
That was a very, very nice idea.
It was brilliant. A lot of people watched. That was really cool.
Yeah.
But that's the kind of way it was. It was like fintech fight club. It was fintechs versus the banks.
Yeah.
It didn't help that the fintechs were going around, we're disrupting the finance. No, but it's not disruption. It's evolution, right? You can't, there's no, disruption's a negative word. Young companies bandy this word around as though it's cool. It's not a cool word. Go and check any marketing from Google, Meta, Facebook, any of these big firms. They don't use the term disruption. It's a negative word.
Yeah.
Right? I don't think it's cool that you're disrupting. I prefer the term evolving.
Also because a lot of people do not like the idea of changing, itself.
Exactly.
Is one of the hardest thing that you can do in a company. To change things.
Here's a hard tip. Never use the word disruption in your marketing. It's a terrible word to use. It's not a positive word.
Yeah.
I mean, if I came to you and said, I'm going to disrupt your hair, you're not going to be a happy person. It's not a good thing.
No.
It's
you wonder what happened
to word and why people have started using it as a cool word. I just don't understand. It's not a cool word. Never use that in your marketing. That's a hard tip.
No, it's a very good point in my opinion. I think that right now the things are changing. We see more and more financial institutions to work along with startups. They see them, investing in startups, adopting new technology and everything. We all know that, the financial industry has always been very, very hard to change, but we are seeing those steps in that direction. So maybe a question I would like to ask is, where do you see, this kind of industry going from now on? So we saw a first phase of fear, second phase maybe of integration, let's say, or joint effort. Where do you see this industry going in the next, let's say, 5 to 10 years?
I'm always a fan of B2B. Because the financial technology, fintech firms are filling a gap in terms of agility, new types of creative solutions that fundamentally traditional institutions can't do. So I believe going forward, we'll see increasing collaboration. The banks will rely more and more they all rely on technology anyway, but more and more and openly to startups. I mean, startups are beginning to also learn how to do business with banks and traditional institutions. I mean, we, for example, here talk to firms about how to maybe rejig their financials to show that they're robust, because, in part of a due diligence, if you go to them with a spreadsheet and a cash flow forecast where you say, and we're going to raise this much money in 2 years time, but until then we're going to have a cash burn of God knows how much, that's not going to make a bank happy.
No.
Change it around, make it show them that worst case scenario, we can survive while servicing you. Do you get what I mean? So you need to be able to show that you're not going to go bankrupt, right? And there's ways to do that with your financial forecasting. But I think the collaboration is only going to increase. Now, obviously, I think now we're beginning to also see the challenges come in areas. But that's always been the case, right? We've always seen challenges in areas. Now, they're not suddenly going to destroy the traditional industry, but it's good to see those challenges appearing, Revolut, etc. Right? But I think it's just going to get better, right? It's not going to be it's evolving. Simple as that.
I agree with you on that part. I think that there is also a little bit of differences between the different kind of ecosystem that you have around the world, So we see more innovation, for example, in the US, or at least more push for innovation there, or for example, in Southeast Asia. But I think that as Europe, as an let's say as a continent, we are still a little bit behind at that point of view. So maybe,
Yeah, that's a big topic of discussion.
yeah,
So,
because basically right now we are behind in terms of capital, behind in terms of number of startups, for example, number of unicorns, but we are, trying to revert that kind of trend. We are trying to push, and we are trying to go in the right direction with a couple of ecosystems, in my opinion, that are rising a lot, like, for example, the Italian market, the Spanish market, Luxembourg as a financial hub. So do you think that, first of all, do you think that we have a shot on being on the same level, like, for example, of the US
no,
or the Southeast Asia?
sadly, no.
Mm.
I don't think so. I think we're too far behind.
Mm.
It would take a monumental effort and a gigantic switch and impetus of new policy making at the EC level. I would disagree with you on one point. You said innovation. Yes, America's innovative. I think the greatest innovations in fintech are coming in all the developing markets.
I agree
Africa,
with you on this
Southeast
one.
Asia, India,
Yeah.
Latin America.
Yeah.
Because they have no legacy. The problem Europe has is legacy.
Yes.
It's hard to change. Like, I mean, look at it from an infrastructure perspective and the disruption it causes to upgrade piping. If you've never had piping before,
Yeah.
it's easier
It's
to put
easier.
it in,
Absolutely,
right?
yes.
I mean, this is the thing. And developing markets have no legacy infrastructure. It's all new, and so they're going hell for leather.
Same things happen with the phone carrier, for example, in Africa. They didn't have like 3G or edge, connectivity. That they had just
so
the
they
phone,
jump
and
ahead.
they just jumped to 4G or 5G, and that was a huge amount
There's
of.
this I've noticed in terms of innovation over an invention over looking at my lifetime, is that there is this leapfrogging effect, and then everyone tends to a neutral zone. It was the case in mobile phones.
Yeah.
And the UK was actually, I think, quite far ahead in mobile phones when I lived there. And when I moved to New York, I was actually shocked at how backwards their mobile phones.
Absolutely.
But eventually everyone reached a point, right? But mobile phones is easier slightly because the masts are overground and mobile phones are handsets. You can change
Pipes
things,
are
right?
way harder.
The core infrastructure is hard. Banking infrastructure is hard.
Yeah.
And Swift, for example, be it that I do think it needs replacing, but we don't do it. It can't be done easily.
Yeah.
Instant payments, how difficult is that? Whereas you do, I mean, in China,
Transfer,
the thought of not having instant payments, people go, what do you mean it's not instant? It's insane. So developing markets, I think, is where real creativity is happening. And they will ultimately be the most digital in terms of financial services in the coming years. And we already see that. China's an obvious case, right? Europe has a big problem, sadly. I think, how many $100 billion companies has Europe produced in the last 50 years?
Very few, I would say.
By current market valuations, one. SAP.
Yeah, that's not.
How many have been produced in the US and Asia?
Yeah, I would say a lot of them. Yeah.
Something's wrong.
Yeah, absolutely. Yes.
Something is wrong.
And also, if you take in consideration like a couple of multi-billion-dollar company that we could potentially have, like, for example, Klarna or Revolut, they are all going to the US to make an IPO. So they're basically a US company.
Yes, we have a problem with our capital markets, which I think is only going to get worse.
Yeah.
Sadly, be it that the attempt is good, but in the near term, I think will have a negative effect on capital markets, is all the sustainability regulations. If you want to raise money in Europe and complying with those regulations as a foreign company, which will be an extra cost to raise that capital, you need to balance that against the cost benefit, access to investors. And you say, well, I go to the US and I don't need to do all this.
Exactly. Just easier. I was recently reading the number of new IPO on the London hub. That was one of the major financial.
London used to be one of the major financial hubs.
Right now, it was lower than Uganda and another couple of countries in Africa. It was crazy for me. We didn't have any liquidity events.
The rules and regulations, and I'm not speaking out of turn here because now, thankfully, it's been officially recognized with the Draghi report, is killing Europe.
Yeah, absolutely, yes.
As they say, America invents it, China builds it, Europe regulates it.
Yeah.
However, there is also an opportunity here, right? I always see silver lining. Regulation creates opportunities, but sadly, it's a negative opportunity, right? You got all these startups in RegTech, But this is an additional cost to ultimately to business. Yes, they make money because they're helping firms to comply, but you shouldn't have to have that.
Yes.
You know what I mean?
Yeah.
It's a shame.
Yeah.
I'm happy for the fintechs and the regtechs, but it shouldn't be the case.
Yeah.
That's an industry.
People should be free to, decide what they would like to do and which service they would like to use, Like, for example, next year, ADAS 2.0 is coming in Europe. We have MiCA coming in Europe to regulate.
MiCA's positive. MiCA, I think, is genuinely a positive thing.
Yes, because it's going to, in my opinion, prevent a lot of the frauds that we saw in the last couple of years.
It is a framework.
Yeah, also,
right?
Yes. Also
and
true.
I think the rest of the world, are slightly jealous and are looking at how we've done MiCA. MiCA is one of the few positive ones, I think, genuinely positive. AI Act, insane. It's so much.
But still, in their favor, I would say, in my opinion, no one in the world actually produced a good AI regulation yet, because it's so new as a team.
Is anyone producing an AI regulation yet?
Good point.
Learn
good
first.
Point. Yeah, because it's a tricky topic,
Watch and learn.
Yeah.
How long has it taken to create MiCA? I mean, crypto's been around for 12 years now, right?
Yeah, that's a good point.
Learn, right? In all fairness, again, AI in finance has been around for decades.
Yes, that's
I was a trader. The biggest hedge funds in the world for the past 15 years are all algo funds.
Absolutely, yes.
Right? 70% of the liquidity on NASDAQ is generated by algos. Nobody's regulated all of that yet.
Yeah.
So why now?
We're
not got the Terminator coming tomorrow. These AIs are not intelligent enough to be colluding, which is another worry that researchers who've never worked in the private sector think that's going to happen. It's not happening. Learn, right?
Yep.
The AI Act, it's already obsolete, right? Because already the big
most of the models
parameters
will be more than updated when the regulation came out. So it's
So look, regulation, one big factor. The other major factor is risk aversion.
Yeah.
The way I look at it, and my hypothesis around risk aversion is simply this: Europe is still, arguably, be it that America is gradually overtaking, but as a continent, Europe was the first continent of wealth, right? And we have been wealthier for a long period of time, and we have generally a good quality of life and living. And the way people think to protect that is don't do anything. No. In order to keep that, you have to do more because wealth is relative.
Yeah, you need to evolve in order to maintain.
So it's people are scared of taking risks because they don't want to lose what they have. What they don't understand is they will lose what they have if they don't take risk.
If they stay still, they will lose what they have.
Exactly. Yeah. And that's the other big problem. And we see that in investments. I mean, VCs in Europe. Now, every VC all around the world, they do due diligence. I mean, the level of due diligence done on each and every single company, as though, we must make sure that this is the $1 billion. No, we know from portfolio approach. No, you don't do that, right?
Because you don't know in the end.
You don't know. Maybe have a little bit of a gut feel there. I have to admit, I mean, again, it's not always right, but I understand the portfolio approach. When I do my angel investments, I go a little bit on gut feel. I'm not going to go too deep into this. If I have a good feeling, people, product market fit, potential, etc., revenue's been generated, some of my risk criteria have been mitigated.
Let's go for it.
Put some money in it. Put a little bit of money there, put a little bit of money there, keep it building. We don't have that attitude here. It's you get money thrown at you in the US here, and here you don't. It's a long process to get VCs to invest. And then the other big problem is we don't have the big VCs here that can go to series.
The Sequoias and the Excel.
B, C, D round. B maybe, but C, D rounds, no.
Yeah.
Don't have that kind of cash. That's part of the problem. So there's my explanation why at the moment I'd like to be wrong, but I don't see us catching up.
Yeah. That was very, very interesting conversation, to be honest. Unfortunately, our time is over, but it was very, very nice and very, very interesting. Thank you very much for joining.
My pleasure. Thank you very much. I'm sorry if I talk too much.
No, I would have gone for another 1 hour.
Open mic.
It was a pleasure. Thank you again.